Welcome to video 1 within this lesson. In this video, we're going to be covering backtesting. So what exactly is backtesting in the Forex markets? Backtesting is the process of testing a trading strategy on historical data to see how it would have performed in the past. In theory, if a system worked well in the past, it will continue to do so in the future. Remember, like we've said before in the education process, the history will repeat itself. Now, of course, market conditions can change, but we'll get into that into another section. For now, just think of a way to have a reasonable level of certainty that a trading strategy will be profitable in the future. If it lined up in the past and worked in the past, it will work in the future. In order to find out a trading strategy that might be profitable, you would test it on as much historical data as possible. A common backtesting period would be from the last 2 to 3 years, or also most likely I wouldn't go back further than 2001 to the present day. But you kind of want it, since the market does adapt and change over time, I would suggest looking at the last 2 to 3 years at most data. Testing over a longer period of time allows you to see the strategy performs during the market conditions. If you only test in one type of market, you'll get a very skewed look at the performance of the system. Meaning, if you only look at the last week, 2 weeks, or month, you're going to get a skewed point of view just because the market's so new relatively in that past week or month. So if we look at the last 12 months to 24 months to 48 months, we get a very broad and a wide look at what the market has done in the history. How can backtesting help me? We established that backtesting can show you a trading method that has potential to be profitable over a long period of time, but it also has other huge benefits that you may not be aware of. First up, diving into the biggest benefit is probably practice. Just like a professional basketball player practices simple things like free throws, a professional trader also has to practice routine parts of their game. So we use backtesting to do that. We can backtest and see where we can find setups that we find in the markets, and then we can see how they played out to see if we would win on that trade or not win. This overall means practicing spotting opportunities is the biggest thing that we're doing with backtesting. Backtesting can give you the practice even when the markets are closed. So like we know the markets are closed on the weekends, we can still backtest and practice the strategy that we're working on and practicing with trading. You may not think this is very necessary, but if you do not keep up your skills sharp, it's very easy to enter a trade that doesn't meet your criteria and follow your trading plan. So even when the markets are closed, you should still be backtesting and practicing trading, because it'll just keep you dialed in and sharp. If you take a break, you're going to be rusty. The next benefit of backtesting is confidence. Of course, with practice also comes confidence. This is probably the most important result of backtesting is with backtesting, you can predict trades, and if you get them right, you're going to build up confidence in that for when you go live, you're going to be confident, and it's going to help you win over more trades. When you understand how often your system will win, your maximum drawdown and more, you'll be able to pull the trigger on trades more confidently. Meaning, if you've won 25 trades in backtesting and lost 0, you're most likely going to win more in live because you're so confident on it. You have an advantage if you're backtesting. If you apply the advantage enough times, you should come out ahead. By knowing what your advantage is, you will also have to recognize when your advantage has stopped working. And this all goes back to documenting your trades and sticking to your trading plan. Now let's jump into backtesting on the charts. As you can see, I'm on USD CAD on the 4-hour. You can also see that the market is closing, and see how we're actually right here. What we're going to do on backtesting is go back on previous data and see if we can use our trading strategy to find profitable setups and practice off of. As the market's still setting up, we want to look at previous trade setups that we could have found and been profitable on them. So as you can see right here, we have an ascending channel, we have a falling wedge, and a sideways channel. Now, let's just act like this market has not happened yet. So let's go to the replay button, use it for backtesting. Let's start right here. As you can see, I just took away the market. Playing through the speed of the market, we're forming an ascending channel right here. The market's forming. I'm looking for trades. I'm looking for trades throughout here. I don't see anything. Oh, wait. Let's go back just a little bit. Just a little bit before. Let's go back. All right, so we've got the market moving. We've got the market moving. Wait. Let's see what I see right here. All right, so stopping real quick, what do we see within this channel? So we've got our impulse, we have our pullback and correction. In this example, we have a falling wedge form. So with this falling wedge, we found that's going to signal our buy. So using the backtesting, we can look at it. We're going to enter a trade right here. We had the breakout of the falling wedge, and we know when a falling wedge forms in an uptrend, it's considered a continuation. And that's exactly what we're looking at, because obviously we have the falling wedge. That's one confirmation. We have it at the zone. That's two. It's in the bottom of the support on the ascending channel. That's three. And then we had the breakout to the upside. That's four. So right there we have confirmations using backtesting that we found a profitable trade. Remember, the market didn't quite happen just yet. So we can go back and see what happened. So now going back, that I just forwarded and added all this data in. But once again, let's dive into it really quick and watch what happens. So we've got the market forming. We're in a falling wedge now. So right here we can see, okay, we're approaching the zone. We've got a falling wedge. I'm expecting a buy to come, a breakout to the top side in this example. So the market hasn't happened yet, but I found the falling wedge. Let's see what happens. Bang! There we see the spike up. And as you can see in this example, it's a 115 pip movement in this prime example that we're looking at right now. Now, if you line it up, that lines up with the flagpole on the falling wedge, or not flagpole, the post. So that's where we can use backtesting, because this data wasn't happening yet until we came back here and found the trade. So we're using that, and then we can let the market play out. Let's let it play out a little bit more. So now we're in this sideways channel. As you can see, oh wait, what just happened? You see that? We had the breakout of the channel. Now we know with the breakout, we're gonna wait for a pullback. So we had the breakout, the impulse, we had the correction, and we're expecting a continuation here. So right now, the market hasn't formed yet, but we're expecting the market to move to the downside, roughly into this area right here. Reason being that area is just because, look where the trend line lines up in the zone. So the market hasn't formed yet, but we're expecting it because we had the breakout, we had the pullback and retest, and we're moving to the downside. So let's play it and see what happens. Look, exactly that. We had the movement to the downside as we expected, following and respecting this trend line as well. So seeing this was a 130 to 160 pip movement you could have caught. Let's play it a little bit further. As you can see, we see the breakout onto the top side of this trend line. So we're expecting a movement up. So what we can expect here is using backtesting is what we're looking for is patterns that form within here or breakouts, whatever your trading strategy is, you're trying to find that within here. So right now we're kind of seeing a bullish pennant form. So if we could see the market go like this, so a breakout of the zone, a retest of the zone, we're expecting a buy. Now this is where we're gonna have patience and see what happens first. So we see a movement to the downside actually. So this is a prime example of where you wouldn't take a trade just since it did not have that breakout. We wanted to show you this quick example real quick, just because with backtesting, this is what helps you. So we were expecting this to happen and we did not get in a trade yet because it did not happen. So with backtesting, we could have seen that. So this is where you can say, okay, I don't want to get in a trade until it does this. So it's a really good example using backtesting to make sure your trading plan is dialed in. Using my trading plan, I would have never entered this trade because I did not see this break of the zone and the retest. So I was not entered. So with this drop, I would not have even been entered into this trade. And that's essentially how backtesting works. You want to go back into previous data. So right now, let's go back to the daily time frame and go back all the way over here. So we're using all of this data to find previous setups within the market that we could look at. That's all you're doing with backtesting is going back, testing your skills that you've learned, finding pattern setups and just using it. Because obviously the market is still setting up right here. So we can't trade and find profitable trade setups since it's setting up. But in practicing, you can come here, look at all of this previous data on smaller time frames and be able to backtest and test your skills of what you've learned. And that's essentially what you're doing with backtesting.